So in this video, I'm going to go over how I personally play earnings, some strategies I have surrounding earnings, and this is just for entertainment and all just my personal opinions and could be very wrong. So let's get started. So the first strategy I like to play surrounding earnings is when earnings are coming up, sometimes there's a ramp the days before, maybe the day before the earning report is released. Because earnings is an event can act like a catalyst. So let's see, Wix happened this week. Um, so if you look at the day before, there was a trend up uh, towards the actual earnings report. So you could just join the hype, right? Not even play the actual earnings, just the day before, right? That trend and made some money. Let's see, JD is another example. So JD's earnings, you don't see it because it's actually Monday pre-market. So yeah, you could have joined the trend before the actual earnings report is released. So you're not playing the actual event and just ride that hype towards that catalyst, that event. Again, this is just some of the most recent examples, but yeah, you can do your own research, see how it's played out in the past, if it's repeatable, and see where your confidence level is on this strategy. So yeah, to catch or take part in this strategy is you probably want to check the NASDAQ earnings website, make a list of the upcoming earnings in the next week or two, and start tracking those on a watch list, watching them like maybe every day to see what day they might start ramping up. Maybe they'll just ramp up one day before earnings, or sometimes just a few days before. But basically, just keep an eye and ride the trend. And sometimes it's a pretty clean trend. I think SQ also might have did it. You might have to go to 10-day to capture it. Yeah, so before earnings, it started trending up. But yeah, so another way I like to play earnings, or another strategy I have surrounding it, is to join the trend after the earnings are released. So the first one was kind of strategies you play before the earnings report, and this is one strategy that you can play after the earnings report. I'll outline them all in the description below. So yeah, so this one is another. So it's to join the trend after the earnings are released. So let's look at PDD. So you basically for this strategy you want to join the trend, the good momentum after the earnings report released, if they like release some good one and you perceive it to be good. So PDD, you can look at it again like a few days before the actual earnings, it started ramping up, so you could have joined that trend and then like forgot about it for a while, and then again it ramped up the day before, so you could have also done the strategy again there. But yeah, so for the strategy is we want to join it after the earnings report was released. So yeah, the earnings report was released, and you could have just joined the trend, ride that positive momentum, and you would have made some money right there, right? I think also, so that's one example. Actually, this reminds me, DKNG also happened recently, and like they reported their earnings. You can see they reported earnings here as a mixed wave, and you can just kind of uh, ride that momentum if you think it's good. And yeah, I guess that's more of a scalp trade though. But yeah, so I guess let's get back focused. So again, the second strategy was to join the uh, positive momentum after the earnings report was released, just writing it. The third one is after earnings is released, but it crashed, and you still think it's a good buy, or like it's an overreaction, or basically you still believe in the stock. You can just buy it for the low and ride the recovery back up. So the example for this is Costco that comes to my mind. So 180 day should capture it. So earnings was released here, and you can see like it went down on earnings. Sorry, that was my dog in the background. So yeah, it went down on earnings, but I thought it was a overreaction and that it shouldn't have went down. So I used this opportunity to buy it for a low and try to join its recovery. And yeah, the recovery happened like right away, and you can see just buying it at the low, you would have made some money riding that recovery. And it wasn't just recovered; it recovered and more. So yeah, that was a pretty good ride. So yeah, that was a this is the third strategy. Basically, after the earnings is released and it crashes and you still think it's goodbye, you ride recovery up. Another example, and it's a pretty recent example, is D-Dog. So that was pretty recent. So yeah, it crashed or not crashed, but it fell off on earnings. We can even look at the news, pull up the news here. I think it was on 11:10. Yeah, it was 11:10. So yeah, I thought like it was pretty good news, and I don't know why it went down. So I wanted to ride its recovery. I actually didn't buy in. I bought in some here and wrote that, but yeah, I was looking for the bottom just in case it would fall down even more. But yeah, so I found the bottom here, and then I rode that recovery up, and I made some money here. But I guess I could have held it another day. But yeah, so if earnings crash, you think it's good, join it for the recovery, and sometimes it might go even more, like if you looked at Costco. So yeah, so now we talked about strategies to play before earnings, and we talked about strategies to play after earnings. And now this is the strategy that I use to play for the actual earnings. And the example I have is Sam. So for this one, I guess for Sam, so playing the actual earnings, I guess it's more of a gamble. Playing the actual earnings is probably not a safe strategy, and not as safe I think as the other ones. But yeah, I think it's pretty fun. So yeah, it's been working for me, and so I keep on doing it. And I'm just trying to be very picky, and yeah. So Sam, I guess if you look at it, it was like 300 in March, and 300 in March, and now it's like what 900? Yeah, 900. It even went to 1,000. So I guess like probably beer consumption went up during this pandemic. Everyone's safe at home, so I don't want to say stuck at home because it's good to be home. Yeah. So I played this earnings. What I my thought process at least for this one was like, so let me put the 5 year just in case. So 5 years, so you can see like before the pre-COVID levels, it was way above pre-COVID levels, right? So you can see it's way above pre-COVID levels. So the actual earnings I played was this one. So yeah, it was way above pre-COVID levels, and that made me want to play it. Another reason I want to play it is I was looking at the past earnings. So this one I kind of ignored for the most part, but this one captured a full impact of like I don't know sales or whatever during the pandemic, and even with a full quarter of impact from COVID, the pandemic, it shot up on earnings. So with that in mind, I really wanted to play it. Personally like passed all the criteria or like I had to play earnings or this earnings. So yeah, I played it and you can see it shot up on earnings. Pretty crazy. Yeah, and yeah. uh, so yeah, that was one of the earnings I played. Um, yeah, so there's other few earnings I played and maybe I'll outline in another video, but yeah, you can also look at like sympathy plays and non-sympathy plays. So like, if one stock goes up during earnings, maybe another not related stock, but like, or I guess like a sympathy stock could also go up on earnings, even though they didn't have earnings that day. Um, yeah, so I guess let me explain that better. So if you look at Nike, Nike had earnings on what 9/22, I think. I think 9/22. Yeah, 9/22. Yeah, it went up. Maybe because like everyone again, you could have justification for why Nike went up. Maybe it's like more people buying running shoes, or hiking shoes, stuff like that. Yeah. So if you look at it, jumped up on earnings on 9/22, but also like a similar play like Lulu, also on 9/22 had no event on 9/22, but it still shot up. So it just moved in sympathy with that. So and then you can see here like it continued a positive momentum up. But yeah, that's an example. I guess in like the opposite of that is like INTC. INTC didn't do so hot in earnings as you can see. And then so INTC didn't do so hot in earnings, and earnings was 723. And you can see the opposite, AMD on 723. They didn't have earnings yet that day, but on 723 they shot up too. So it's like the opposite of sympathy. Maybe like the competitor went down, so this one went up. Yeah, so that's another example on how to play actual earnings. Again, I'll write down or outline the 4 strategies that I mentioned here in the description of this video. But yeah, so to reiterate, the best way to catch these is probably just have a list of earnings a list of the upcoming earnings for like the current week, the next week, and the following week. If you're looking for the ramp up, start checking them like every day, see like what day it's going to start ramping up, or as the day gets closer, see if it's going to ramp up like the day right before. As you can see, some of the tickers I showed you, they ramped up the day before and looked pretty repeatable to me, right? Yeah, so that's something you can do, and then you can just decide what strategy you want to apply, whether like joining the ramp hype before earnings, joining the good momentum after good earnings, or for the good earnings and it crashed, joining the recovery, or playing the actual earnings. Yeah. Yeah. So that's it. I mean, I have a few other earning strategies, but these are the 4 that I want to outline in this video. And yeah, that's all I have for you guys and girls. Uh, yeah. Yeah, so if you had value in this video, feel free to like it. And cool. See you guys. Bye. Girls. Bye.